All right, it is 7 p.m. Let's get started. Evening, everyone. Thank you so much for joining us here today for our short little but info-packed webinar on how Hang Seng Flagship Indices actually track different market themes. As you know, on Monday this week, we had an exciting launch at Bursa Malaysia, where we saw the launch of our new Hang Seng CEI and Hang Seng Tech warrants that tracks the indices. Now, without further ado, we do have our first speaker today, Mr. Gary Chiu. He's the head of research and insights at Hang Seng Indexes Company Limited. Now, a lot of people have been asking our side, why do we actually go into this index? Can you tell us the difference between that? So for those of you who are avid Hang Seng warrants traders, can you please press HSI into the chat? Just type HSI so I know that you are Hang Seng Index traders. If you actually are new to warrants and this is your first time actually listening to a warrants webinar, please press 1. If it's a second time listening to our Kenanga webinars, please press 2. If it's a third time listening, please press 3. If you are advanced trader, maximum extreme Hang Seng, press HSI them so I know how familiar you are. And Gary as well will know how familiar everybody is with the products. Great. I see some HSI, some ones, some HSI as well. Everybody else, what's your level of experience? First time listening to a webinar, second time, third time, or are you brand new? If you're brand new, you can press 0 as well. But if you're pretty experienced, you can press HSI. All right, super. Without further ado, Mr. Gary Chiu. Hey!
Hi, everyone. Yep, can you see my presentation?
Beautiful.
Okay.
And just to give everybody a heads up before we start, there won't be a Q&A session for this, but if you want, you can just screenshot over there and scan the WeChats, the WeChat QR on the right-hand side over there, because we want to keep it short and quick. All right, Mr. Gary, on to you.
Okay, thank you. Good afternoon, everyone. I'm Gary Chiu, the head of research and insights of Hang Seng Indexes Company. Actually, many thanks for Kenaga's invitation for me to share my thoughts about how our flagship indices can track different investment themes. So particularly, I will put more time on Hang Seng China Enterprises Index, HSCEI, and also the Hang Seng Tech Index, given rising interest from investors on China market, especially on the tech themes. So in the following presentation, I will divide it into 6 parts. First, I will briefly provide some background information about the Hang Seng Index companies and also the importance of using flagship indexes like HSI, HSCEI, and Hang Seng Tech Index on how their ecosystem can help investors to track different investment themes in the market, construct index-linked products, as well as hedging investment risk. And then I will go through how the design of the flagship indices, in particular the HSCEI and the Hang Seng Tech Index. And finally, I'll walk you through the difference among the 3 flagship indices across various dimensions like industrial composition, revenue growth, valuation, volatility, and also the return correlations. Overall, this helps audience understand how to use Hang Seng indices, flagship indices to track different market themes. Okay, so this is the first part about Hang Seng Indexes Company and also our index series. Actually, Hang Seng Indexes Company is the Hong Kong's leading index provider, which was established in 1984. Actually, before the establishment of this company, Hang Seng Index was launched in 1969, as proposed by Dr. Lee, our ex-chairman of our parent company, Hang Seng Bank, and as an internal benchmark for tracking Hong Kong's stock market's performance. So after proving this effectiveness in accurately gauging the market trends, the index was officially launched to the public in 1969. So initially, the index comprising 33 constituent stocks versus only 59 listed companies in the market at that time. So with most of them were foreign-owned enterprises. So given its comprehensive coverage, HSI established itself as the premium barometer of the Hong Kong stock market's performance. And in 1984, after the establishment of Hang Seng Indexes Company, the HSI was then transferred to our company to operate and hence starting the index business. So overall, Hang Seng Indexes Company is more than just an index provider. We are your trusted global partner in navigating the world of opportunities. And our mission is very clear: deliver innovative, sophisticated index solutions that meet the evolving needs of investors worldwide. So with our unique position in the market and employing a client-centric approach, we play the pivotal role in capturing the growing global flow of capital in China, thus providing authentic, high-visibility benchmarks that empower investors to make smarter, more informed decisions. So in all, we have employed three strategic imperatives to achieve our missions. First, in connecting West to China, HSI will leverage our unique position to capture global investors' capital flow in China while guiding investors through China's evolving landscape. On the other hand, we connect mainland to offshore through empowering mainland investors to navigate offshore markets safely, effectively, and also with confidence. And to meet the evolving clients list going forward, we will stay ahead to develop new business areas that meet the evolving clients list. So our company is a leading provider in Hong Kong and combine indexes that cover both the Hong Kong mainland and ASEAN markets. In addition to the well-known Hang Seng Index or the Hang Seng Tech Index, we also offer various series of market benchmarks to assist investors in making investment decisions. And this cover market capitalization index, sector and thematic indices, sector factor indices, strategy indices, sustainability indices, and also the global indices. So currently, we have over 2,200 real-time indices with a total of 125 exchange trade products, ETP, linked to our index series on 16 different exchanges worldwide. As at the end of March this year, the total asset under management for passive product tracking our indices was amounted to $88 billion. So this map illustrates the market coverage of Hang Seng Index products. So you can see that our concentration is highest in Asia and Europe. Apart from that, we also have presence in America, Africa, and Australia. So, okay, the first part are Flagship indices. HSI, HSCEI, and Hang Seng Tech Index plays a very crucial role in financial markets by serving as key benchmarks for investors, fund managers, and also issuers of financial products. And given their well-developed ecosystem, these three indices help investors to track different investment themes, construct index-linked products, and also hedge the investment risk. Here we use HSI as an example to illustrate the components of a flagship indexes ecosystem. Basically, I think an index should meet three criteria in order to classify as a flagship index. First, an index should have exchange trade products that help investors to track the index performance. If the total AUM of this ETPs grows to a sizable level, investors will also have demand for futures and options for the index in the market in order to magnify the performance or use it to hedge the index portfolio. And apart from that, we may also demand on other kinds of index-linked products in the market, like warrants, CBBC in Hong Kong, daily leverage certificates in Singapore, and also like turbo certificates in Europe, etc., etc. Second, apart from derivatives that link to the index, we also see derivatives indexes that were constructed based on the HSI. For instance, the Hang Seng ESG Enhanced Index selects constituents from the HSI and implement an exclusion policy based on three criteria like ESG risk rating, controversial product involvement, and also adherence to the UNGC principles. So overall, this index has integrated ESG rating in constituent selections, and weight adjustment that have reduced its overall ESG risk by at least 20% compared with the HSI, but still having similar industrial exposure. Third, since the HSI is well known among mainland and overseas investors, and offer a comprehensive range of index-linked products, it can strengthen Hong Kong's role as a super connector between China and global market by facilitating the listing of these products on multiple exchanges worldwide. Actually, over the past few years, the global ETF market has experienced rapid expansion, with asset under management surging significantly. And according to the research by ETFGI, in 2012, global ETF AUM stood at $1.8 trillion, but by the end of May this year, it has skyrocketed to over $16 trillion, which was nearly 8 times over the past 13 years. And regarding to Hong Kong, while its ETF market got off at a relatively late start, with the first ETF, which is called Tracker Fund, and followed the Hang Seng Index, was launched in 1999. The market has since grown significantly. While the total market cap of ETFs listed in Hong Kong reached 400 to 500 billion Hong Kong dollars by the end of 2023, according to the Hong Kong EX, this chart shows that the AUM of our 3 flagship indices since 2021. With the Hong Kong market started to perform since last year, total AUM for our 3 flagship indices increased by more than 30% since the beginning of 2024. So overall, total AUM of the 3 flagship indices ETP accounted for more than half of the market share in Hong Kong, among of which the AUM of ETPs tracking Hang Seng Tech Index demonstrate the fastest growth of more than 60% since the beginning of 2024, or increased by 35% in the first 6 months of this year. While the growth in AUM of ETPs that link to the HSCEI also reported growth of 15% in the first half of this year. This slide shows the average daily turnover in Hong Kong as well as for the Hong Kong listed ETPs. With the Hong Kong market started to perform since the end of 2023, the market's average daily turnover ADT surged nearly 1.3 times over the past 15 months to around 243 billion Hong Kong dollars. Actually, the same happened to ETP's trading volume, with ADT increased faster at 1.8 times from 14 billion Hong Kong dollars in 2023 to 39 billion Hong Kong dollars in March of this year. As a result, the share of ETPs in Hong Kong market turnover jumped sharply to 16% in March this year from 13.3% in 2023. Notably, before the launch of the Stock Connect program with mainland China in 2022, the average daily turnover of ETPs was only 7.7 billion Hong Kong dollars, with less than 5% of the market share. And among the 3 flagship indices, Hang Seng Tech Index has the shortest history, and since its launch in July 2020, this month is actually its 5th anniversary, versus HSI's 55th anniversary last year and more than 30 years history for the HSCEI. And given the market's strong interest in the technology theme, especially after DeepSeek has kickstarted a market rally at the beginning of this year, the AUM of Hang Seng Tech Index ETP surpassed that of the HSI in the first half of this year, i.e. around $26.3 billion versus $23.7 billion for the HSI's ETP. And in terms of the average daily trading volume of Hang Seng Tech's futures, it jumped by more than 96 times since its launch in 2020 to around 171,000 in the first half of this year, which is comparable to that for the HSI and also the HSCEI. So in all, a young but fast-growing ecosystem was built on the Hang Seng Tech Index. So in the following section, I will go through the design of the 3 flagship indices, with a particular focus on the HSCEI and Hang Seng Tech Index, given China and technology-related themes are currently the market focus. The exercise was launched in 1969. At that time, the market has only 59 listed companies, so that we can say the HSI has been the key index to reflect the overall performance of the Hong Kong stock market. But with increasing number of listed companies in Hong Kong stock market, while the role of the HSI is to track the performance of blue chip stock in Hong Kong, which means they are the largest as well as the most liquid stock of the major key industry. So the number of HSI constituents only increased modestly to 85 now. Despite this, the index covers 67% of the market cap and 61% of the market turnover in Hong Kong at the moment. And in terms of the index universe, HSI only includes large cap and mid cap from the Hang Seng Composite Index. The Hang Seng Composite large cap and mid cap indices, and excluding secondary list foreign companies, stable securities, biotech companies with stock names ending with marker B, and also exclude the specialist technology companies with stock names end with marker P. So with the revamp of the index design in 2021, constituent selection for the index changed from 7 industry groups, namely financials, information technology, consumptions, properties, utilities, and telecoms, and also from other industry, which consists of 4 small industry groups. Given its target to achieve market cap coverage of about 50% for each of the 7 industry groups, we believe that the number of constituents for the HSI will ultimately increase to 100. With increase in number of constituents, weighting cap for constituents was lower from 10% to 8%. And to maintain the distinct identity of the index from the HSCEI, HSI needs to keep a minimum number for the Hong Kong companies at 20. And after this revamp, it helps to maintain the HSI's representativeness for the Hong Kong blue chips. This slide shows the number of constituents and weighting of the 12 industry within the HSI, and among of which the first 3 industry include 34% weighting for financials, 25% weighting for consumer discretionary, and 18% weighting for information technology. But in terms of market cap coverage for the whole market, 6 out of the 7 industry group we employ to select constituents were above 50%, except the healthcare industry. And regarding the index top 10 constituents, it shows that it includes the well-known tech giants ATMX, given their huge market cap. Even we are using free float market cap weight to calculate their weighting. And apart from that, there are 5 financial stocks and 1 telecommunication stock in the list. And this slide shows the year-to-date performance of HSI versus the Hang Seng Composite Index. Actually, Hang Seng Composite Index HSCEI has more than 500 constituents versus 2,300 listed company on the main board, but it covers 95% of the company's market cap, so that the index is designed to track the overall performance of the Hong Kong stock market. And given Hang Seng Index is designed to track the performance of blue chip stock in Hong Kong, and with market cap coverage of 67%, its performance has a high correlation with the HSCI, the market index, and implying a high representativeness for the Hong Kong market. Given HSI's high representativeness of the Hong Kong stock market, it can assist investors to analyze and estimate the impact from different perspectives. For instance, the tariff proposed by the US earlier this year has sparked concern about worldwide economic slowdown, resulting in global market turmoil and a surge in market volatility. Given the US tariff on imports, companies manufacturing for and exporting to the US would face high risk. And for those Hong Kong listed companies with majority of revenue derived from mainland China, Hong Kong, or Macau could be relatively shielded from the US tariff impact. And based on our analysis, among the Hong HSI constituents, there are 56 stocks with more than 80% revenue exposure to mainland China or Hong Kong, which we think they should have lower direct impact from the US tariff. And overall, they amounted to 67% of the index weighting. In response to the turbulence in the Hong Kong market triggered since Trump's Liberation Day on 2nd of April, plenty of Hong Kong listed companies promptly reacted and boosted their share buyback during the subsequent week. And this slide shows the revenue breakdown of the HSI constituents that are exposed to mainland China and Hong Kong. And XSS shows the constituent stock code, while the YSS shows their revenue percentage revenue breakdown. So from here to the left, there are 56 stocks that have more than 80% revenue to mainland China and Hong Kong. So if we deep dive into the constituents compositions, we note that based on the constituents list on 11 April, before the effective of the last index review, there are 7 banks and 76 non-bank stocks in the index. So obviously, 7 banks should have limited direct impact from the US tariff. And among the 76 non-bank stocks, there are 49 stocks showing over 80% of their revenue were derived from mainland China or Hong Kong, and they accounted for 45% of the weightings in the index. So adding the 22% index weighting for the 7 banks, constituent stock with lower direct impact from the US tariff represents 67% of the HSI's index weighting. And after US announced the reciprocal tariff in early April, the HSI dropped 13.2% after the long weekend. Actually, we have done similar analysis for HSCEI and also Hang Seng Index, and noted that 69% and 72% of their index weighting have lower direct impact from the US tariff hike. As a result, these 2 indices also deliver similar performance after the US announced the reciprocal tariff. And apart from using the index constituents breakdown to estimate an impact from the US tariff, this kind of analysis can also be employed to estimate the market stakes to what companies value. Typically, if corporates believe their share price is undervalued, they perform share buyback to support share price, improve fundamentals, and also enhance shareholders' return. And for example, in the first quarter of this year, the quarterly buyback value on Hong Kong main board amounted to 44 billion Hong dollars. And given the Hang Seng Composite Index cover 95% of the market's total market cap, its constituents account for 99% of the main board's share buyback value. Although HSI has a lower market value coverage of 67%, all of its constituents are large cap or mid cap and with strong balance sheet. As a result, its constituents account for 83% of the market's share buyback value. In terms of the daily average buyback value, it was 653 million Hong dollars for the main board in the first quarter, among of which 547 million Hong dollars were from the HSI constituents. So this slide shows the quarterly buyback value for the market and the HSI since the first quarter of 2023. And in here, you can note that the large increase in share buyback was in the second quarter and third quarter last year, where the market was at a lower level of below 20,000. With the market rebounded to above 20,000 level, we saw a decline in the share buyback value for the market. And this slide shows the daily performance and also the buyback value for the HSI before and after the US unveiled the tariff. In here, you should see that right after the shortfall in index price, the daily buyback value was increased significantly, and then return to a normal level after the market being stabilized and return to a high level. Okay, this section we cover the HSCEI, which is one of our leading flagship index alongside the HSI and also the Hang Seng Index. And the index was initially launched as a purely H-share index in 1994 that heavily weighed toward the old economy industry. Since then, the HSCEI has evolved to include red chips and privately owned enterprises, I mean the P chips, that largely operating in fast-growing emerging industry. So overall, the shift in both eligibility and also composition of the HSI reflects China's economic transformation from a predominantly an investment and manufacturing-driven old economy to the one fueled by consumption and service economy. Actually, the design of HSCEI is to track the performance of Hong Kong-listed mainland China companies, whose majority of revenue or assets are derived from mainland China. Also, unlike the Hang Seng Index, it is a purely rules-driven index, and the selection of its constituents will be mainly based on criteria like whether a security is from mainland China, but excluding stable securities, foreign companies, biotech companies ending with marker B, specialist technology company with stock name ending with marker B, P, and also the investment companies. Also, a company has at least 1 month listing history is required. Then the top 10, the top 50 securities with the highest combined market cap will be selected as constituents. And within the index, constituents are free float, adjusted market cap weighted, and with 8% weighting cap to avoid overconcentration. And the change was after an increasing number of mega-sized SOE in the areas of financials, telecom, industries, energies, and materials seeking for listing in Hong Kong after 2005. And index will be conducted on quarterly basis. Actually, since 2006, there are increasing number of Chinese private enterprises listed in Hong Kong. As the sector they operate are mostly related to new economy with fast-growing prospects. The market has been shifting the focus from P chips toward P chips from H shares and red chips. In terms of market cap coverage and turnover coverage, P chips weighting increased from 16% and 21% in 2014 to over 60% in 2024. So to enhance the representativeness of the HSCEI for tracking the performance of mainland companies listed in Hong Kong, the index has started to include P chips and red chips by phases during 2018 and 2019. And in response to the rising mega-sized IPO deals from new economy segment after 2020, we introduced the fast entry rule for early inclusion of sizable newly listed mainland stock in the index. This slide shows the number of constituents and weighting of the 12 industry within the HSCEI, and among of which the first 3 industries include 31% weighting for consumer discretionary, 27% weighting for financials, and 22% weighting for information technology. In all, the industry breakdown is totally different from the one before P chips and red chips added in 2019 and 18, which before that financial account for more than 70% and energy ranks second with 10% weighting in the index. And regarding to the index top 10 constituents, actually similar to the HSI, it also included the well-known tech giants ATMX, given their huge market cap, even though we are using the free float market cap weight to calculate their weighting. As the index only include mainland China companies, so that we don't have the 3 Hong Kong financial companies, and their places were replaced by another 3 China financial companies. Also, with less constituents compared to the HSI, concentration of the top 10 constituents is high at 60% versus 56% for the HSI. And this slide shows the year-to-date performance of HSCEI versus the HSCEI. Given HSCEI only include mainland China companies, so that its performance shows some deviation from the HSCEI versus the performance of HSI and HSCEI are largely in line in the same period. So why it is worth to learn more about the Hang Seng China Enterprises Index? I think China is too big to be omitted, and we need to have a China index to track the market performance. As shown in this slide, China is currently the world's second largest economy, which is the deep green bar, trailing only the United States. And one interesting observation is that China's GDP approached 19 trillion US dollar in 2024, surpassing the combined GDP of the next four largest economies, namely Germany, Japan, India, and UK, which together total around 16 trillion US dollar GDP. This underscores the sheer scale of China's economic footprint and the vast opportunities it presents for global investors and business. And notably, despite its massive economic scale, China will deliver a robust 5% GDP growth in 2024. This reflects the country's strong economic fundamentals and highlights the underlying resilience and relative stability of its market. As discussed in previous slide, China ranks at the second largest economy globally. Reflecting this position, its combined stock market, spanning both Hong Kong and mainland China, also ranks second in the world by market cap. As of May, the total market cap stood at 16.5 trillion US dollar, with Hong Kong contributing 6 trillion and the three mainland China stock markets accounting for 10 trillion US dollar. And this pie chart on the right-hand side illustrates that China represents approximately 13% of global equity market's capitalization, underscoring its significant scale and also the global relevancy of China's capital market. In this slide, we're going to take a closer look at how mainland China companies have transformed the Hong Kong market over the past 3 decades. In 1995, mainland China companies represent just 5% of the total market cap. Fast forward to May of this year, their share has ballooned to 81% of the total, as an increasing number of mainland firms choose Hong Kong for their public listing. And in 2025, the light green bar shows H shares making up 20% of the total, while the dark green bar, comprising red chips and other P chips, at another 61%. In contrast, the market share of local Hong Kong companies, which is a gray bar, dropped from 95% in 1995 to just 19% at the moment. Even more striking is the market turnover. Mainland companies now account for 91% of the total trading activities, underlining just how central they have become to the Hong Kong market. And mainland China's growing influence in the Hong Kong stock market extends beyond the sheer number of listed companies. Actually, since the launch of the Stock Connect in November 2014, mainland China investors have increasingly direct capital into the Hong Kong market through the southbound channel. As shown in the chart, southbound net inflows have risen steadily over the past decades, reaching a record of 808 billion Hong dollars in last year. Notably, by the mid of this year, year-to-date inflows have already reached nearly 700 billion Hong dollars, equivalent to more than 80% of full-year total in last year. And if this momentum continues, 2025 is on track to set another record for southbound inflows, reflecting strong and sustained demand from mainland investors for the Hong Kong listed asset. So this section covers the Hang Seng Tech Index, which is our third flagship index alongside the Hang Seng Index and also HSCEI. And given the rapid advancement of technology, nowadays many enterprises have employed technology to do business in an efficient and cost-effective way. Moreover, some listed technology companies has demonstrated their success in employing technology to deliver strong growth in business and eventually in earnings surge. So in order to track the fast-growing theme, we launched the Tech Index in July 2020. So later this month will be the index fifth anniversary. Despite its short history, AUM of its ETPs and trading volume of its futures already going in a level comparable to that for the HSI and HSCEI. So I think it is worth to let overseas investors to have full understanding about the index. Okay. As technology becomes an integral part of more and more aspects of our lives, our understanding of what constitutes a tech company is continuing to broaden and evolve. So nowadays, the technology sector is no longer just limited to traditional hardware and software companies. Indeed, this sector includes a wide variety of enterprises that operate via technology-enabled platforms to carry out their business in an efficient and cost-effective way. So to capture the fast-growing interest in this investment theme, our company has launched the Tech Index and positioned it as the next Flagship Index to reflect the performance of our top listed companies coming from technology or innovative segment. Broadly speaking, the stock universe includes companies that are listed on the main board, but exclude secondary listed foreign companies and investment company listed under Chapter 21 of Hong Kong EX listing rules. Currently, there are 12 sectors under the Hong Kong Stock Exchange main board listed universe, among which we mainly identify 5 industries, namely consumer discretionary, information technology, financials, healthcare, and industrial, whose companies are eligible to be included in the Tech Index. Moreover, eligible candidates must have significant exposure to 6 advanced technology themes, namely autonomous, cloud, digital, e-commerce, fintech, and internet, which they could positively impact our everyday life. And after that, we then screen this universe of eligible candidates by assessing their R&D spending, revenue growth, and whether they are operating via a technology-enabled platform. So after this screening, the top 30 stocks in terms of market cap will be selected as the index constituents. To avoid the index being highly skewed toward mega-sized stocks, this index is free float market cap weight, and there's an 8% individual stock weight cap. The same as HSI and HSCEI, the tech index will be reviewed quarterly. And also, given many homecoming Chinese companies and unicorns are planning for listing in Hong Kong, there's a fast entry rules to facilitate IPO stock to be added to the index without waiting until the next quarterly review. So this slide shows the distribution of the tech index constituents by industry. Companies from consumer discretionary accounts for 56% of the index weighting, then followed by information technology at 40%, and the remaining 4% belongs to healthcare and industrials. This slide shows the top 10 constituents by weighting, and the same as HSI and HSCEI. Tech index also includes well-known tech giants ATMX. And apart from that, we also see other tech companies like NetEase, BYD, and JD. And with consumer discretionary and information technology accounts for around 96% in the index. Out of the top 10 constituents, 6 belongs to consumer discretionary and 4 belongs to IT. Given there's an 8% market cap, 6% cap on individual stock weighting in the index, although ATMX are huge in size, the weighting in the index are not substantially higher than other constituents. On the whole, the top 10 constituents already accounted for 71% of the index market cap, versus the bottom 5 constituents account for only 2% of the index weighting. In comparing the year-to-date performance of Hang Seng Tech Index versus the Hang Seng Composite Index, Given the tech index only includes tech-related companies from 5 industries, its performance showed a large deviation with the HSCEI as well as with high volatility versus the performance of HSI and HSCEI are largely in line in the same period. So why the China tech sector has gained interest from investors since last year? And looking at this slide, we can see the outperformance of Hong Kong stock markets over most major markets in 2025. As of June of this year, major Hong Kong benchmark holds a year-to-date return of about 20%, led by the Hang Seng Tech Index, which jumped around 21% year-to-date. And this performance significantly outpaces other major markets, including US. A major turning point came in January this year when DeepSeek unveiled a highly cost-efficient large language model, sparking AI optimism and driving a strong rally in Chinese tech names. In this slide, we further look into Chinese tech sector's outperformance in 2025. And the chart on the left-hand side shows that US tech stocks, as the light green bar, consistently outperformed their Chinese counterparts in recent years. However, this trend reversed in 2025, with Chinese tech companies outperforming US tech by nearly 20 percentage points year to date. As briefly mentioned in the previous slide, a major catalyst behind this shift was the launch of the DeepSeek model. And the chart on the right-hand side shows that the Hang Seng Tech Index began to outperform in mid-January, coinciding with the model's release, sparking an AI-driven rally across China and also Hong Kong tech sector. And compared to the previous transformative technologies such as personal computers and the internet, generative AI saw a much faster pace of adoptions. And the blue dot on the left-hand side chart represent the 39% adoption rate for generative AI, which corresponded to 2 years after the launch of the first mass market generative AI product. While the adoption of personal computers 3 years after its mass induction was only at 20%, about the same value as for adoption of the internet after 2 years. And for the chart on the right-hand side, it was estimated that 47% of work tasks are now performed by humans alone, while 22% performed mainly by technology, like machine and algorithms, and 30% completed by a combination of both. But by 2030, this proportion share of tasks performed by solely or predominantly by humans is projected to decline to 33% as a result of increased automation. And looking at this slide about the global AI competitive landscape, US is undisputably the top leader in AI development, but China's AI capability is catching up fast. For example, like the DeepSeek's groundbreaking model that we have mentioned before. So in this scorecard, China ranks second in terms of overall AI capability, just right after US, in which China's R&D contribute the largest share of its score, following US and China are several European countries and also the Asian countries. So after having introduced the design and performance of 3 strategy indices, in this section I will compare the 3 indices in the aspect of share type, industry breakdown, revenue growth, R&D spending, valuation, etc., in order to distinguish these 3 indices. Since the Hang Seng Index primarily tracks blue chip stock listed in Hong Kong, and it is designed to include a minimum of 20 Hong Kong companies as constituents, or around 26% of the index weighting. Its share type distribution is more diversified. And apart from the Hong Kong companies, it also has H shares, red chips, and also P chips. In all, these China companies account for 74% of the index weighting. As HSCEI now includes large private tech companies and also red chips as constituent stocks, rather than just include the old economy H shares, The proportion of private enterprises has risen to 53%, which is higher than 37% in 11% share of X shares and red chips. With most of China's tech companies are P chips, private companies make up 89% of the Hang Seng Tech Index. And regarding the difference in sector distribution, since emerging industries are primarily operated by private enterprises, the sector composition of HSCEI has shifted from heavily concentrated in financials in the past to consumer discretionary with 31% weighting, while financials rank second and then followed by information technology. And within the HSI, Hong Kong companies are predominantly engaged in financials with 34% weighting, reflecting its role as a global financial hub. And apart from that, the second and third largest industry include consumer discretionary and IT. As the Hang Seng Tech Index is designed to track high growth tech stocks with constituent selection based on 5 industry and 6 technology themes, it is primarily composed of consumer discretionary and information technology. With the Hang Seng Tech Index focus is on large technology companies listed in Hong Kong. Its constituents saw the fastest revenue growth among the 3 flagship indices, with increase of 21% and 28% revenue growth in 2024 and 2025, versus only 1 to 13% growth for HSI and 6 to 13% growth for the HSCI in the same period. So with improvement in earnings for the market, all flagship indices saw accelerating revenue growth in this year. And I think the Hang Seng Tech Index strong growth in revenue is mainly supported by its high R&D expenses to revenue ratio at 6% versus only 3.4% and 4.1% respectively for HSI and HSCEI. As faster growth normally comes with a high valuation, Hang Seng Tech Index PE ratio is high at 17% versus 10 to 11%, 10 to 10, 11 times PE for HSI and HSCEI. And this chart shows the market cap of the 3 flagship indices. With high coverage by the HSI, it has the highest market cap of 28 trillion Hong Kong dollars, which was 28% and 113% higher than that of the HSCEI and the Hang Seng Tech Index. And regarding the correlation of returns among the 3 indices, over the past 3 years, HSI has a high correlation of 0.99 with HSCEI, mainly due to overlap in some big caps, while HSI as well as HSCEI's correlation with Hang Seng Tech Index was relatively lower at 0.95 to 0.96, given the Hang Seng Tech Index only include tech stocks. And with the market started to turn around from 2024, all 3 indices extend gains to 2025, with year-to-date increase ranging from 19 to 20%. In terms of the price volatility, Hang Seng Tech Index has the most volatile index among the 3 indices, which is annualized volatility year-to-date, which is 42%, up from last year's 37%. So I think that's pretty much about my presentation. And if you are interested to learn more about our indices, please feel free to go to our website, hsi.com.hk. Also, you can download our research publication there in order to know more about our insights on what indices which can be used to track different market themes. So now I'll pass time to Isabelle. Thank you.
Thank you so much, Gary. It was really interesting that you brought up the differences between the indices. And for those of you who have more questions for him, feel free to message the WeChat link that has been sent over. Thank you, Gary. So we've just got about 10 minutes left on the clock, and I just want to go a bit more into a bit more detail of how you can actually take advantage of the differences between these indices. As you can see on my screen, which I am sharing now. You guys are so shy today. Are you not going to say thank you to Gary? All right. For here, A really quick run through for those of you who are not familiar. For the Naga matrix, we've got a really interesting scanner that you can use whenever you want to differentiate the structured warrants for the indices. So, you know my style. I like to do things quick and easy. So let's say if you're looking for a Hang Seng Index, right? Or as he puts it, Hang Seng Composite Index. You press Hang Seng, and all of the Hang Seng indices on the market pops up. And this is HSICWIJ, HSICWIK. Sure, no problem. But let's say you want to look for a Hang Seng CEI. Then all you have to do is press, we've already refreshed our scanner here. You would go to Hang Seng CEI. Let me just zoom in a tiny bit to show you guys. I would press on NagaWarrants.com, our website. I'll press HSCEI, and then pops up two of the brand new warrants that are available for you. HSCEI CAA. As you can see, it is a 7.6 times effective gearing warrant. Sensitivity is 26 ticks. Time to expiry is 112 days. Exercise price, that means this warrant is still out of the money. And for our normal way of remembering things, black is for call warrants and pink is for put warrants. So the pink color warrants for HSCEI is HSCEI HBA, or hubba hubba. For the next one, HSTECH. Let's say you really enjoy how Gary presented it and you understand that large language models are the way of the future and DeepSeek is in this constituency. You want to get into Hang Seng Tech. You just press that and our two new warrants pop up. Our call warrants, HSTECH C30 pops in. Very attractive with 19 tick sensitivity. That's a really, really sensitive warrant. And Hang Seng Tech H27. H is for puts. Now, those are the main differences when it comes to NagaWarrants.com, but how do you trade it? For those of you who are using TradingView, there are a few key things you need to remember, but the constituent, that is the underlying, right, is different. If I'm looking at Hang Seng Index, I'm looking at Hang Seng Index futures, you can see over here, it is a 15-minute chart. So if I look at Hang Seng Index, the normal Hang Seng Index you're familiar with, you would have drawn, you've used maybe a one-day chart, you would have plotted since the beginning of time. I always teach you how to do this. And then you would have analyzed it accordingly. And if you're too lazy to analyze it accordingly, then you can always refer to NagaWarrants.com, our Telegram, which I'll show you after this. Next thing is, however, if you want to trade Hang Seng CEI, what do you look for? You would look for this one, HHI. I repeat, it'll be Hang Seng China Enterprise Indices, but it's going to be HHI, one exclamation. One exclamation means that it is the current contract for the month because these track futures contracts and for the rollovers and so on. So this is the current contract. As you can see, you would do your plotting if you're a technical analysis fan like I am. You would do your plotting on the HHI one exclamation mark. Since we're here, let me give you a quick run through on how we always do it. Like I always share, pull the chart to the beginning of time, like that. I like to do a Fibonacci retracements from the little dinosaur on the bottom left, you can see there. I would do something like this. This is just my style of plotting. Everybody has their own style, as you know. So mm, 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 mm. So I plot it from all the way at the bottom, then I like to go all the way to the top, and then I'll be able just to see how far the retracement is from the top. Something like that. Then I can see the rough range. I can see that Hang Seng Hang Seng China Enterprise used to have a historic high of 20,000, and it's currently in a rebound mode, especially since the beginning of 2023, it did a double bottom there, and 2024 right in the beginning. Then I would plot accordingly. If I'm a technician, like most of us are when it comes to trading Hang Seng, then I'll be able to plot my lines. So I'm using my finger today, so it's a bit tricky. Then I would do something like that. And you will plot your basic moving averages, your support resistance line, and so on and so forth. Same thing as well. If you're trading Hang Seng Tech, you will pull up a HTI, one exclamation point, for the futures. Now, if I look at the 1-day chart, you can see that Hang Seng Tech Index, it's been around since 2021. That's the time of the dinosaur. You can see on the bottom here, there's that little dinosaur. My easy brainless strategy for you guys is pull up a Fibonacci retracement from the beginning until the end, analyze according to moving averages, and then trade accordingly. When you look at 1 day, you would like to then zoom into a shorter time frame. For example, a 15-minute chart over here. I have the example of Hang Seng Index, 15 minutes, and then you zoom in a bit further into 1-minute charts if you are an exceptionally active investor. So another thing I want to show you is on our Telegram. I did have a whole range of slides today, but I think this is more urgent for you guys if you want to be trading. All right. So every single Monday, we promote these trading ideas, and if you're not too sure how solid they are, I'll tell you one thing. The NagaWarrants trading ideas that we give every single Monday, it has a 84% win rate. 84% win rate. That means a lot of the ideas that we promote, they actually do go up. As you can see, our DRB HICOM idea there, the ROI for DRB was 10% and the HICOM idea for C3N warrants was 37%. But since we're on Hang Seng today, you can see the same thing as well. Let's scroll all the way back to Monday. Tum, 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 tum. Where is my Monday trading idea? There we go. And same thing as well, you'll see that going forward, we'll also have Hang Seng Tech and Hang Seng CEI trading ideas, where we will tell you which warrants that we find the most attractive. If you're overwhelmed by an array of warrants and it's just too much for you to compute, these are the warrants that we think are really suitable to trade the market. And then we'll even have a view where we'll share what our view is on this. For example, we will share and say that, Hang Seng Index futures, this is the range that we expect it to be trading. So before I wrap up, we just want to say thank you so much to Gary. The main thing is we really enjoyed the launch that we had earlier this week, and we're going to play for you a little video on what you may have missed out on Monday. Wow!
HSTECH Structured Warrants Listing Ceremony by Kenanga Investment Bank on 1st of Malaysia.
Kenanga becomes the first issuer in Malaysia to offer structured warrants across all three Hong Kong's key equity benchmarks.
Thank you for joining us in this ceremony. Thank you, Fusa, and thank you, Hang Seng Index, for all your support.
And that wraps it up, our recap for Hang Seng CEI and Hang Seng Tech's listing ceremony. 8 p.m. on the dot. Thank you very much for joining us, all of you, and have a lovely Thursday. Thank you. You guys are so shy today. You can't say thank you back. I'm just bullying you guys. Yeah, I just saw a question that we had earlier. The question from individual was, do you plan to come up with Hang Seng Tech Index specifically for AI-related stocks? That is really, I believe, the Hang Seng Index Company's management decision. So we'll leave it to that. But at least they know that you are interested. All right. Thank you, Freddie. Thank you, Vivian. Thank you, Li Chen. Most welcome, Jen Koo. Right now, I'm in JB. We're having SGX collaboration as well. All right. Thank you. Good night.